legal, keep it legal. Episode 2, Top Glove Financial Comeback.
Top Glove expects to return to near pre-pandemic performance levels by 2027, driven by higher factory utilization and improving margins. The glove maker said financial year 2026 first quarter earnings already matched 2019 levels as more factories reopen, allowing idle production lines to be utilized and reducing depreciation costs. Net profit for the quarter jumped sevenfold to 38.6 million ringgit, supported by higher sales volumes, particularly from the US, despite lower average selling prices. Looking ahead, the group expects glove demand to remain strong in 2026, supported by higher utilization rates, additional capacity, and gradual price increases.
Top Glove is the world's largest manufacturer of gloves.
A company that once dominated the global glove industry, now making a shocking comeback. But is this recovery real or just a risky illusion?
Assalamualaikum and welcome back to Keep It Real, Keep It Legal. I am Muhammad Aiman bin Azmi, 01-2025-070-020, your moderator. Today, we are diving into one of the Malaysia's hottest corporate stories, the company of Top Glove Corporation Berhad. A 600 profit sounds impressive, but it is really sustainable? Or are we looking at risky capital decisions? To answer this question, that's everyone are curious. I bring to you the two experts from the real industry, investment analyst and lawyer. Introduce yourself, guys.
Hi, I'm Zamir bin Muhammad Zain. My matrix number is 012-025-020-855. Yeah, honestly, from a market's perspective, it feels a bit suspicious. After years of losses, suddenly profits jumps up like that. Investors will definitely question whether it's real growth or cost-cutting effects.
Hi, my name is Muaz bin Muhammad Azran and my matric number is 012-0250-20862. Aiman, I think that's where company law becomes important, because even if profits increase, directors must still follow strict rules before making decisions like dividend or capital adjustments.
Oh, okay. Okay, let's start with a share. How does the profit surge affect shareholders?
Simple. When profit goes up, investor confidence usually goes up. People start buying shares thinking the company is recovering, so share prices may increase.
But is that always a good thing?
Not necessarily. If the profit is not sustainable, then investors are basically not making decisions based on temporary performance. That can mislead especially minority shareholders.
Too much.
Exactly. From the legal standpoint, under Section 70 Company Act 2016, any information that affects shares values must be accurate and not misleading. Otherwise, it raises issues of fairness and protection of shareholders.
So basically, if Top Glove recovery is temporary, shareholder might be overestimating the company real value.
Exactly. It's like buying something thinking it's premium, but it's actually just a temporary hype.
Now, let's move to the most dangerous part, dividends. Okay, if profits are up, can the company just declare dividends? Can you answer the questions on this, Mas?
It's not that simple. Under the Company Act 2016, the dividends can only be paid out of profits. And more importantly, the company must pass the solvency test in Section 4. The two prolonged definition under Section 4, number 1, cash flow solvency, the ability to pay debts as they become due, and the second one is balance sheet solvency. The assets of the company are greater than its liabilities.
Well, like that, Muaz.
Yes.
Like 6-7, huh?
So, even if the profit looks high, if the company is still financially unstable, they shouldn't pay dividends?
Thank you, Zamir. I pass to Muaz for answer your questions regarding company shouldn't pay dividend if the company has financially unstable. Is it correct in legal perspective, Muaz? Is there any acts that govern this issue?
Correct. Because dividends reduce company capital. If the company pays too much too early, creditors might be at risk. This test is forward-looking for at least 12 months following the transaction.
So, this is where it gets risky. If Top Glove pay dividend just for attract investor, it might actually weaken the company. From your perspective, Muaz?
Yes, and legally, directors can be held personally liable if dividends are declared improperly. Directors can be sued under Section 131 and Section 133, Subsection 2. Criminal section under Section 131. Conversely, the profit and solvency rules is an offence punishable by up to 5 years imprisonment and a fine up to 3 million ringgit.
3 million ringgit.
Yes. Under Section 133, Subsection 2, willful payment, any director or manager who willfully pays an improper dividend face these penalties. Willfulness includes reckless indifference to the company's financial state.
Okay. Now we understand about the director liability if they mislead the dividend of company because they are need to be responsible, right? So let's debate this. Do you think Top Glove genuinely recovering? This is our part of like ending. It's not ending, but the part of ending.
Honestly, I think it's too early to say. The profit increase might be due to cost cutting, but there's actual demand growth. That's not sustainable long term.
That's about investment analyst opinion. So now, how about the lawyer opinion?
Legally, the company is allowed to improve performance, but the issue is whether directors are making responsible decisions based on that improvement.
So it's not just about profits. It's about how they manage it.
Exactly. Company law focus on responsibility, not just performance.
Okay, now Zamir, how about yours?
And from investor perspective, transparency is key if they understand the risk they are fund. But if they are misled, that's a problem.
Okay. So what should investor and director learn from these discussions?
Investors should not rely on profit numbers. They must look at sustainability.
And directors must ensure compliance with the Companies Act 2016, especially when it's come to dividends and capital protection.
So the law is basically there to prevent companies from being aggressive, is it?
Exactly. It protects both shareholders and creditors.
So, is Top Glove comeback is a risky?
From a market view, promising but uncertain.
From a legal view, acceptable but must be carefully managed.
And that's the reality of company law. True. Not just a profit, but a protection. Thank you for coming for this episode. It's very brilliant idea and we have got a perspective from industry, real industry. So I hope this will help to all audience and thank you for listening to our podcast today. So let's close this podcast by keep it real, keep legal. Let's go do, okay? 1, 2, 3. Keep it real, keep it legal. Thank you. Subscribe now.